Welcome to our deep dive today.
Yeah.
We're going to be looking at Rakesh Jhunjhunwala and specifically a lecture that he gave back in 2009
Yes,
at Flame University.
that's right.
And for those who may not know, Rakesh Jhunjhunwala,
Yeah.
often called India's Warren Buffett, he had a really fascinating perspective on the Indian economy and the stock market.
Yeah, I mean, especially back in 2009, it was really kind of the beginning of India's sort of emergence onto the world stage, and he saw that.
Yeah. And he was so bullish on it.
Very much so.
And I think he does a good job in this lecture of taking you through his reasoning.
Yeah.
Like not just telling you what to think, but like explaining
Absolutely.
why he thinks that way about the Indian economy and about the markets.
Yeah, he kind of lays out his whole thought process, and I think it's almost like a master class in investing and really understanding the Indian economy.
Yeah, he kind of demystifies it a little bit. So one of the things I thought was interesting is right off the bat, he tackles this idea that the stock market is just for gambling.
Right.
Which I think is something that a lot of people kind of just assume or think.
It's definitely a common misconception.
Yeah, so how does he kind of like flip that narrative?
Well, he actually calls stock markets temples of capital allocation.
Wow.
And what he means by that is that it's really a mechanism that facilitates the flow of money from those who have it to those who can productively use it.
Yeah.
And that's really what drives economic growth.
Yeah, that's a great way to put it.
I thought so too, yeah.
And he also has this, I think, kind of funny comparison.
Oh, yeah.
Where he compares the markets to women.
Right.
He says they're always commanding, always mysterious, always concerning.
That's a good one.
It's very Jhunjhunwala, very sort of like
Yeah, it's very memorable.
Provocative and interesting.
Yeah.
What do you think he's getting at with that comparison?
Well, I think it really speaks to the importance of understanding market psychology. Just like with people, you need to be able to sort of read the emotions, understand the forces that are at play.
Okay.
The market is unpredictable, but if you can be aware of those forces, then you can better navigate it.
Right. So he starts off giving us this like foundational understanding of the market.
Right.
And then he kind of moves on to this really bullish outlook on the Indian economy.
Yeah. Very bullish.
And he uses the word inevitability.
Yes.
To describe India's growth.
Right.
Like it's not a matter of if, it's a matter of when. What makes him so confident about India's future?
Well, he points to a number of different factors.
Okay.
He talks about India's tolerance and adaptability.
Okay.
And he links it back to Hindu culture.
Okay.
And this openness to change and new ideas.
Okay, interesting.
And he also highlights the skills and entrepreneurial spirit of Indians.
Yeah.
And, he points to their success worldwide in industries like pharmaceuticals and space technology.
He even says that Indians are genetically prone to skills.
Yeah, it's a bold statement for sure.
It is a bold statement.
But it definitely makes you think about the potential, of the Indian workforce.
For sure.
He goes on to talk about democracy as well.
Okay.
Recognizing that it can be slow-moving at times,
right,
but emphasizing its stabilizing force and the importance of independent institutions in fostering growth.
Yeah.
And then there's the demographics.
Yeah.
India has this young population that's expected to really fuel economic expansion for decades to come.
For decades to come.
And of course, you can't forget the high savings rate in India,
right,
which provides capital for investment.
Right.
So he really paints this picture of what he calls orderly evolution, this gradual but steady progression towards significant economic growth.
Yeah.
And it's fascinating to see how he connects all these pieces.
It is fascinating. And he doesn't stop there?
No, he doesn't.
Because he then draws a direct link between this economic growth and the performance of the Indian stock market.
Exactly.
He's basically arguing that a bull market in India is fundamentally tied to this economic expansion.
That's right.
So it's not just hype. It's not just speculation.
No.
It's about real value being created.
Right.
Yeah. So I'd love to dig into that a little bit more, how he actually makes that connection between economic growth and stock market performance.
So he focuses on this correlation between corporate profit growth and GDP growth.
Okay.
Back in 2009, he even predicted that India's nominal GDP could hit 15%.
Wow.
Leading to a potential corporate profit growth of 18%.
That's remarkable.
It is.
It really shows like how deeply he understood the mechanics of the Indian economy.
Yeah, absolutely.
What did he see back then that made him so optimistic about those growth numbers?
Well, he laid out a number of factors
Okay.
that make India an attractive place to invest,
Okay.
both for domestic investors and for foreign investors. He talks about the modernized trading system,
Right.
the favorable regulatory environment,
Right.
the growth of the financial services industry,
Mhm.
which is channeling more savings into the market.
Right.
And he even uses this word inevitability
Yeah.
when talking about foreign institutional investment.
Right.
Like he just believes that as India grows,
Right.
global investors are not going to be able to ignore it.
Yeah, they're going to have to take notice.
Right.
Yeah, that's fascinating. So now kind of moving from that macro perspective, Jhunjhunwala really dives into his own personal investment philosophy in this lecture.
Yeah, this is where he really gets to the nitty-gritty.
Yeah, like how he picks stocks. So he starts by emphasizing the importance of asset allocation.
Right.
So deciding how much to invest in different asset classes, debt, equity, gold, real estate.
Right.
And he also talks about the importance of consistency.
Yeah.
I'm curious what he means by that.
Yeah. Well, he highlights how even a small difference in returns over a long period of time can make a huge difference thanks to the power of compounding.
Right.
It's about staying the course.
Okay.
And letting that power of compounding work. It's magic.
So it's not about trying to get rich quickly.
No.
It's about making smart decisions and being patient.
Exactly.
Okay. And then he kind of dives into even more specifics of like how to evaluate a company.
Yeah.
He urges us to really understand the business model, to go beyond the hype and figure out how the company actually makes money.
Right.
He even uses this analogy.
Oh, yeah.
He says, if the girl is pretty, the suitor will come.
Right.
Essentially, if a company has strong fundamentals,
Yeah.
investors will be interested. What are some of those key fundamentals he looks for?
Well, he talks about the size of the opportunity,
Okay.
the addressable market,
Okay.
and the management team.
Right.
So understanding the business itself and its potential for growth, knowing if they can actually capture a good share of the market, and assessing the competence and the integrity of the leadership team.
Right.
These are all critical in his view.
It sounds like he's really emphasizing doing your homework.
Absolutely.
You can't just jump in blindly.
No, you got to do the research.
Right. And throughout all this, he also stresses the importance of patience in investing,
Yeah.
allowing time for that earnings growth to materialize. It's not about quick wins. It's about long-term value creation.
Absolutely.
I'm seeing a theme here.
I am too.
It's all about patience.
Yeah. It's not about chasing fads. It's about finding those companies that have solid foundations
Right.
and then letting them grow.
Yeah. And then he talks about his approach to exiting an investment. And he believes this should be an independent decision,
Right.
not solely driven by whether you're making a profit or a loss at that moment.
Exactly. There are other factors at play.
Yeah, so if you're just riding the wave, you might miss some critical signals that are telling you it's time to get out.
Right.
What are some of those signals he talks about?
Well, he mentions finding better opportunities.
Right.
With higher potential returns.
Right.
Noticing changes in the company's business model,
Okay.
growth prospects, or competitive landscape.
Right.
And even recognizing when that anticipated earnings growth has peaked.
So he's really thinking several steps ahead,
He is.
trying to anticipate
Yeah.
those shifts in the market. And he's not just focused on making money.
No.
He also talks about the ethos of his investment firm,
Yes.
Rare Enterprises, which is deeply rooted in his personal beliefs.
Yeah.
So it's not just about profits.
No, it's about values and principles.
What are some of those core values that guide him?
Well, he acknowledges the role of what he calls God's grace and elders' blessings,
Okay.
highlighting his humility
Right.
and belief in a higher power.
Right.
He also talks about never aiming to win all wars, accepting that losses are inevitable, and focusing on the bigger picture.
Right.
And he really emphasizes integrity and ethical conduct in all dealings.
Wow.
So it seems like his personal values are very much interwoven with his professional life.
I think that's refreshing
It is.
to hear from somebody who's so successful in the financial world.
Yeah.
It sounds like he's not just focused on the bottom line.
No.
He's really trying to build a business that's based on principles.
Right.
And that's just the first part of his fascinating story.
Yeah.
We're going to dig into more about his personal journey
Yeah.
and how he went from defying his father's advice to achieving remarkable success
It's a great story.
when we come back after a short break. when we come back after a short break.
Looking forward to it. So welcome back to our deep dive into the mind of Rakesh Jhunjhunwala.
Last time we really talked about his views on the stock market and investing.
Yeah.
But now I want to kind of dig into his personal journey a little bit more.
Yeah.
He faced a lot of skepticism early on, even from his own family.
His father actually advised him against pursuing the stock market.
Really?
But Jhunjhunwala had this unshakable self-belief.
Wow. That's so inspiring, especially when you're first starting out.
Yeah.
And, he had to work hard to secure those first loans.
Right.
But eventually he found people who shared his vision.
He did.
And in his first year, he earned 25 lakhs.
Yeah, a remarkable return.
Yeah, that must have been a huge confidence boost.
Absolutely.
But I imagine it wasn't all smooth sailing from there.
No, he talks about those early years as a period of immense learning and growth.
Yeah.
He had to navigate the market, develop his own approach, and most importantly, learn from his mistakes.
He even admits to making some classic rookie errors.
Yeah.
Like he laughs about how he used to think that companies with high share capital and reserves were automatically good investments.
He was focusing on the wrong metrics.
Yeah.
But he learned from that and honed his ability to really read balance sheets and evaluate companies effectively.
That's great. He also mentions the importance of mentors.
Yeah.
People who guided him along the way.
Right.
He credits Rakesh specifically.
Another prominent Indian investor.
For having a big influence on him.
It shows that even someone as successful as Jhunjhunwala recognized the value of learning from others.
Yeah.
He was always eager to seek guidance and expand his knowledge.
Yeah, there's this really pivotal moment in his career.
Oh, yes.
The 1990 budget presented by Finance Minister Madhu Dandavate.
Great.
And Jhunjhunwala essentially bet big on this budget.
He did.
And it paid off spectacularly.
It did. He spotted an opportunity that many others missed.
Wow.
He had this deep understanding of government policies and how they would impact various industries.
He talks about risking his entire savings on this budget.
Yeah.
And multiplying his wealth significantly.
It was a bold move that required a lot of conviction.
It really did. It wasn't just luck. It was a combination of research, market understanding,
and a calculated risk appetite.
Yeah, and that seems to be a recurring theme in his journey. Identifying opportunities.
Yes.
Conducting thorough research.
And then acting decisively.
Yeah, he wasn't afraid to make big investments.
Right.
When he believed in something.
Exactly. Now let's talk about the Harshad Mehta scam.
Oh, yeah.
This was a major scandal that rocked the Indian stock market in the early 1990s.
And Jhunjhunwala not only navigated this turbulent period, but he actually emerged even stronger.
He even made profits both during the market's rise and fall.
Really?
He was shorting stocks as the market crashed.
Wow.
Which requires incredible skill and courage.
It does.
It really demonstrates his adaptability.
Yeah.
And his ability to profit in both bull and bear markets.
That's amazing.
He had this exceptional knack for reading market sentiment and anticipating shifts.
So this period also taught him valuable lessons about risk management and capital preservation.
Right.
He understood that protecting your capital is just as important as making profits.
Right. It's about not losing what you've already gained.
Right. And he learned to control his emotions.
Yeah.
Avoid getting caught up in market frenzy.
Right.
Emphasizing discipline and a long-term perspective.
Exactly. Now moving on to the tech boom of the late 1990s.
Okay.
Interestingly, Jhunjhunwala admits to being initially skeptical of the technology sector.
Really?
He wasn't convinced by the hype surrounding tech stocks.
Huh.
He even jokingly refers to software as garbage in, garbage out.
So he wasn't a believer right away.
No, but he eventually recognized the sector's potential.
Okay.
And he started investing in tech companies.
Okay.
He even established his own software company.
Wow.
Although that venture didn't succeed.
Oh.
He highlights the valuable lessons he learned during this period.
So even failures can be learning opportunities.
Absolutely. He gained a deeper understanding of evaluating companies in a rapidly evolving industry. And he also learned about the dangers of unrealistic expectations and the importance of separating hype from reality.
Right.
Now, Jhunjhunwala considers the early 2000s as the defining time of his investment career.
Okay, why is that?
He recognized India's entry into this new era of growth and the stock market's potential for a significant bull run.
Okay.
He talks about investing in growth stories and building a concentrated portfolio of companies he believed in.
So he was really convicted in his choices.
He often went against conventional wisdom.
Wow.
And bet on companies that others were overlooking.
That's interesting.
He also emphasizes taking meaningful stakes in companies rather than making small passive investments.
So he wanted to have a real impact.
Right. He aimed to be a value-adding investor.
Not just somebody who's along for the ride.
Exactly. And during this time, he also began building a team.
Okay.
And formalizing his investment firm, Rare Enterprises.
So he was scaling up.
He recognized the need for talented individuals.
Right.
And a sustainable model for long-term success.
So he was transitioning from a solo investor to leading an investment organization.
Exactly. And he also talks about resisting those get-rich-quick schemes.
Yeah.
Emphasizing the importance of integrity and ethical behavior.
Okay.
He even shares an anecdote about someone pitching him a stock manipulation scheme.
Oh, wow.
Which he immediately rejects.
So for him.
And he uses this striking analogy. He says, anybody who has tried to misbehave with the stock market or with a woman, the road is half an object.
That's classic Jhunjhunwala.
It is.
Provocative, memorable, and insightful.
Yeah, he's basically saying that dishonest actions will eventually lead to downfall.
Yeah, you can't cut corners.
Right.
And he also discusses his aspirations for the future, including institutionalizing his investment firm for longevity,
right,
exploring other asset classes and geographies,
and engaging in philanthropy.
It's clear that investing wasn't just about making money for him.
No, it was about personal growth, intellectual stimulation, and making a positive impact.
He had a much broader vision.
He did. And in the next part, we'll delve into the specific advice he offers to aspiring investors and entrepreneurs.
Okay.
Advice that goes beyond just finance and touches upon life success and finding your own path.
So we're back. And in this final part, in this lecture, Jhunjhunwala really starts talking directly to the students. And he starts offering advice that goes beyond investing.
Right.
He's really talking about life success, finding your own path.
Yeah, it's pretty inspiring stuff.
It is, and it's advice that's just as relevant today as it was back then.
Absolutely.
So he starts off by talking about dreams.
Right.
And the importance of staying grounded.
Yeah, he says you can never achieve anything without dreaming, but dream with your feet on the ground and your head also on the ground.
So have those big aspirations, but keep a practical, realistic approach.
Right. Don't get lost in fantasy land.
He then emphasizes the power of passion.
Yes, he does.
He says, do something you love, do it with passion. And he attributes his own success to his deep love for investing.
Right.
I think that makes a lot of sense.
Yeah.
If you're passionate about something, you're naturally going to be more dedicated, more persistent.
Definitely.
It becomes more than just a job.
Right.
It's something you genuinely enjoy.
Right.
And then he gives this really insightful piece of advice.
Oh, yeah.
He says, aspire, but don't envy, encouraging us to focus on our own journeys and avoid comparing ourselves to others.
Yeah, I think that's so important.
Especially in today's world with social media.
Yeah, it's so easy to get caught up in that comparison game.
It is. And it's a recipe for unhappiness.
Right.
So Jhunjhunwala is reminding us to stay focused on our own goals and not let envy sort of sidetrack us.
Absolutely.
He also highlights the importance of learning from other people's success.
Yeah, he says, respect other people's success and learn to learn from it.
So it's about recognizing that we can always learn something from those who have achieved great things.
Right.
So instead of tearing others down out of jealousy, try to understand what they did right and apply those lessons to our own lives.
That's a great point. And of course, he stresses the importance of learning from our own mistakes as well.
Yeah, he reminds us that success is fleeting. He says, never forget one thing in life, my friends, that all adjectives in life are transient, contemporary, success, beauty, power, wealth, taste. So he's acknowledging that life has its ups and downs.
Yeah.
Success can be temporary. So we shouldn't let it go to our heads.
Right.
And when we face setbacks, we shouldn't let those define us either.
It's all about perspective.
Yeah. What matters is how we learn and grow from those experiences.
Yeah.
He encourages us to embrace both the good and the bad, navigate life's challenges with resilience and a positive outlook.
Absolutely.
And he ends the lecture on this beautiful thought.
Oh, yeah.
He shares how when he first started out, the horizon seemed so far away.
Mhm.
But as he reached each horizon,
Yeah.
he realized there were always more to explore.
It's a powerful metaphor for life.
It really is.
There's always more to learn,
Yeah.
more to achieve, more to experience.
It's a continuous journey
Absolutely.
of growth and discovery.
Right.
It's a reminder that learning shouldn't stop.
Mm-hmm.
Even when we reach a certain level of success,
Even then.
there's always room for improvement and
Yeah.
expansion.
Exactly.
You know what I really appreciate about this lecture?
Mm-hmm.
Is that Jhunjhunwala doesn't just talk about investing.
He talks about life.
He talks about life. He shares his wisdom, his experience, his values.
Right.
And it's just this really holistic perspective that's both inspiring and insightful.
I agree.
He really was a remarkable individual,
He was.
both as an investor and as a human being.
Absolutely.
So as we kind of wrap up this deep dive,
Mm-hmm.
what would you say are some of the key takeaways for our listeners?
Well, I think Jhunjhunwala's journey reminds us that success requires passion resilience, a willingness to learn, and a commitment to ethical behavior.
Yeah.
It's about dreaming big, but staying grounded and never losing sight of the values.
That's a great summary. His story is really a testament to the power of human potential
Absolutely.
and the importance of pursuing your passions with integrity.
I think that's a great note to end on.
It is. Thanks for joining us on this deep dive into the world of Rakesh Jhunjhunwala.
It is a pleasure.
We hope you found it as fascinating as we did.
Yeah,
And remember, the journey of learning and growth is just as important as the destination.
that's right. Keep exploring, keep learning, and keep pushing your own boundaries.
Until next time.
See you then.